Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me in honor of Women's History Month, we have Janet Alvarez, executive editor at Wisebread, to discuss the impact of COVID-19 on women and how to manage finances through it and on the other side. Janet, it's great to meet with you. Welcome to Trade Talks.
Thank you for having me.
And Janet, how did the COVID-19 recession disproportionately impact women?
Sadly, in so many ways, women experienced far higher unemployment levels than their male counterparts, in part because they were employed in industries that were more heavily impacted by the recession. So industries like hospitality, restaurants, travel, etc., tend to be populated by female workers more so than men. So women experienced higher unemployment. Additionally, women saw fewer opportunities for work from home. So in addition to being unemployed, once they became unemployed, it became harder for them to seek new employment. And then finally, the issue of childcare. Schools closed down, childcare centers were temporarily shuttered. This also disproportionately impacted women in their ability to either maintain employment or seek new employment.
Were the stimulus measures helpful?
They absolutely were. And especially some of the stimulus measures we're seeing now, such as the extension of the child tax care credit, some of the stimulus measures implemented last year, such as mandatory paid leave for caring for sick family members due to COVID. These sorts of things help to protect a lot of jobs, and certainly PPP loans help to protect a lot of jobs. But it wasn't quite enough. We saw that the statistics bore out that these measures still helped male workers more than female workers. And so female workers were still bearing the brunt of the recession, despite the fact that a lot of the measures were targeted to help both sexes equally.
Do you think the impact of the COVID economy will persist?
So unfortunately, what we've seen in previous recessions and during previous contractionary cycles has been that recuperating or regaining lost wages and that lost wage trajectory takes years. So if you found yourself unemployed, if you found yourself underemployed or working for less than you used to make, it can take years to get back to where you were in terms of earnings. That's also true for savings. If you depleted your emergency savings, it can take years to rebuild that emergency savings account. If you stopped contributing to a 401k or took money out of your 401k, that can also take years to recover. So to the extent that unemployment has long-term consequences on our financial health, we can probably expect that the damage wrought by the COVID economy is something also that will last over time.
And Janet, let's talk about going on to the other side here, right? What are the expanded child tax credit checks, a once in a lifetime opportunity for many women, and how should they use them best?
So really, I think a lot of women are facing a tremendous once in a lifetime opportunity to not only enjoy the expanded child tax care credits, but also the stimulus money and also the ability to include in that your tax refund this year. So we're getting this bonanza of tax refunds, stimulus money, and expanded child tax care credit all occurring at once, in addition to all of the other protections afforded at the state, local, or federal government level for COVID. Women should really look at that as an opportunity to solidify their finances, to not just spend it on consumer goods, to not necessarily, think about what you would do with it for pleasure, but to think about, is this a time to rebuild my emergency savings? Is this an opportunity to begin investing? Is this the right opportunity to pay down a significant amount of debt? It's rare that we get windfalls like these. We should take advantage of them, use them as a once in a lifetime opportunity to solidify our finances.
I'm so glad that you brought that up because I feel like when we listen to media, it's constantly being jammed down our throats. The economy is going to get reinvigorated. We're going to spend money on travel and leisure and all the other discretionary items that we haven't had the opportunity to do over the past year. But Janet, at the end of the day, building emergency savings, I really think is what the narrative needs to be because it is of paramount importance. And I really feel like savings needs to be focused on more than anything else. Would you agree?
I agree absolutely. And one of the most sobering statistics I've seen recently is that in the case of women of color in particular, over 40% entirely depleted their emergency savings during the COVID recession. So it becomes even more important to think about that long-term solidification of your financial plan. Emergency savings are absolutely the place to begin. If you depleted your emergency savings or if you drew down on them, top it back up. Remember, the ideal is 3 to 6 months of basic living expenses in that account. So this is your opportunity to create that safety net for yourself because we never know what curveballs life may throw at us next.
And finally, if you're gainfully employed, what is the best use of cash for retirement and planning for any shortfalls? Let's assume you didn't have any issues, you didn't lose your job, you have the ability to work from home, you have a steady stream of income that hasn't fluctuated yet or at all. What's the best use of cash?
So that's where you really need to look at your long-term financial goals. So if you have a significant amount of debt, especially high interest, such as credit cards, the money needs to go there. I would not advocate paying down student loans necessarily aggressively, because we know that there are still stimulus measures in place to protect federal student loan borrowers. So I would be looking at high interest consumer debt. Second, if you don't have a lot of high interest consumer debt, now's the time to think about buttressing, strengthening your investment accounts. Do you increase contributions to your 401k at this time? You absolutely should. Second, think about your brokerage account, your independent investments. Where can you invest that you think will lead to gains over the long term? Always keep an eye on that long-term horizon and those long-term goals. And this mini windfall can be an opportunity with compound interest over time to turn into much more than just a $1,400 per person stimulus check. If you sort of compound that many years out over a 10, 20, 30-year career, suddenly that can be as much as $100,000 or $200,000. So that's why we really need to think about how that money is going to help us build our financial future, rather than just the next vacation is great or as fun as it sounds.
All great points, Janet. We appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.